Last year was a year where I guess investors were distracted from the theme. They were focused on the change in interest rates, some of the macro issues that the world was facing, the prospect of inflation as well, geopolitical tensions and so on. But whilst all of this distraction was taking place, we actually saw some pretty substantial news flow across many of the key commodities attached to the transition. And the one that springs to mind the most is copper, where we've had one of the world's biggest copper mines has had to be closed because of tensions within the country of Panama. That accounts for 1.5% of world supply. And then in addition to that, we've had a number of updates from companies talking about the production prospects for their existing portfolio, and I guess the growth that they were planning to deliver over the next few years. And by and large, this has not just disappointed, but substantially disappointed. We've had very significant production downgrades relative to expectations. So whilst the market has been looking elsewhere and been focused on other topics, the situation has become tighter. It's actually become a little bit more scary in a way, because some of the kind of long expected growth is unlikely to arrive in time. And if we do see some kind of shift in interest rates, we see I guess a more accommodative kind of macro environment for monetary policy, then growth is likely to be a little bit better than expected. It appears to us that China is starting to focus on what it can do to support its economy. That obviously is the world's largest commodity consumer. And so with markets as tight as they are, production disappointing, geopolitical risks attached to resource assets, the supply available for the transition itself is going to be a challenge.
And you mentioned the issues around copper, but there are also geopolitical issues around access to raw materials. And so one of the things that this theme encapsulates is reshoring, or at least friendshoring, but sometimes that might not be possible if these materials are just not available in geographies with whom you're friendly. Where are the biggest concerns on that front?
Yeah, I mean, we've seen some tensions last year, and some of these tensions have been at the fringe on the commodity markets, not the mainstream. So we've seen China put in place restrictions around a commodity called gallium, which is not something that everybody thinks about every day, but you use without knowing. China's recently put in place some import tariffs on coal from certain countries as well. So there are measures out there that are kind of impacting global trade. But I think the point you make around reshoring was very prevalent in in last year. We saw a huge divergence in performance across the steel sector. U.S. steel names were incredibly strong. We saw lots of M&A in the U.S. steel space as well. Whereas in Europe, it was a much more muted environment. And so that kind of the trend around reshoring, domestic investment, the growth in infrastructure attached to that was more prevalent in one economy than another. I think as we move through this kind of energy transition environment that we're expecting between now and middle of next decade, we're going to see strong demand for commodities to support the transition across the global picture. It's not going to be a one country event like we saw with the China cycle in commodities in the early 2000s.